Wouldn't it be awesome to wake up one day and find $1,000,000 in your bank account? I'm hoping you wouldn't go straight out and blow it all on a Bugatti, but instead, you'd invest it wisely until your investments generated enough cash to buy that Bugatti instead. That's why, in this video, we'll be revealing the 13 best ways to invest your $1,000,000. So what are you waiting for? Prepare to take notes if you want to become richer.
Welcome to Billionista. If you love videos about luxury living, please subscribe and click the bell so you never miss a video. And don't forget to like and share too.
Number 1. Buy rental properties. As soon as real money starts to come, it should be spent on purchasing rental homes. $1 million invested in rental properties will yield a rental income of between $50,000 and $100,000 annually. This is based on paying cash for your properties. Things may appear much more promising if you are knowledgeable about your options and willing to use debt. There are many alternatives available to you, including single-family, multifamily, and commercial locations. Anyone with $1 million can purchase a few apartments located close to commercial centers and subsist on the rent. In addition to earning rental revenue, the value of the property is also likely to increase over the long term. Number 2. Invest in REIT, Real Estate Investment Trusts. Simply put, wealthy individuals like yourself pool their resources and invest them in managed funds. The fund's managers venture into the market and invest the capital in assets that produce income. The amount received is then divided by the sums that each individual gave to the fund. People who don't want to manage the day-to-day operations of their rental properties will benefit greatly from REITs. And these funds also give you the opportunity to participate in larger transactions. For instance, purchasing and leasing an office building is unquestionably more expensive than choosing 1 or 2 apartments. It's important to understand that if you are prepared to put in the work, you can achieve superior results on your own. But with this method, the main focus is on saving you time. Number 3. Gold, silver, and other metals. Millionaires who want to ensure that their money retains its value typically convert it to gold and silver. Since the Middle Ages, gold has been the preferred material for use as a store of value. When governments mess with the economy, knowledgeable investors always take their money out of the market and put it into metals, which causes increases in the price of gold. For instance, following the financial crisis of 2009, the economy jumped in 2010. And in 2020, with the crisis in our hands and the perception that the stock market as a whole is in a bubble, investors shifted their money into gold, at least in the short run. While it is in your safe, your gold doesn't create a return. Rather, it is simply worth more in today's currency. Technically, you have to outperform the return that gold offers if you wish to increase your wealth. Number 4. Stock market. Since March 2020, Tesla's stock price has increased 5 times, and you want in on the action. Great chances do arise from time to time for those determined to seize them. You may win a lot of money, even though the majority of our stock funds are simply increasing in an investment account. We occasionally enjoy the buzz you get when you correctly play the market. Don't deceive yourself by trading with demo money. Instead, deposit a small sum of real money and play it as cautiously as you can. This is the greatest way to learn. There are many stock investment platforms on the internet, so you shouldn't have any trouble locating one. You'll learn more by doing and putting funds on the table than if you just play at it. Number 5. Start a business. It's time to get to work now that the less active options have been exhausted. Getting a job is much simpler than starting a business. It's more like you're doing many jobs but not being paid unless the company lasts and prospers for a few years. It's true that having $1 million in your pocket will give you a significant advantage and enable you to hire better employees and purchase the equipment you need to hasten your growth. But be sure to avoid the pitfall of overpaying. You can expand your own business steadily and organically as long as you maintain a frugal mindset in that regard. In this manner, you assume all the risk while simultaneously reaping all the rewards. Number 6. Venture Capital Fund. The funds come into play because investing in businesses is also changing. You can use the index fund strategy in this case rather than handpicking one or two companies to invest in, combining your funds with those of other investors to broaden your investment and lower your risk. Venture capital funds were established in this manner. 10 to 20 different businesses could benefit from your $1 million investment. According to statistics, 10 of them will entirely fail, 5 will barely hang on, 4 will expand slowly, and perhaps 1 will hit a home run. Your wager is that the revenue you'll generate from this deal will be sufficient to generate a profit. Make sure you know what you're getting into before investing in one of these collective funds, as they typically have a minimum investment requirement. Some of them may even need you to make a recurring payment every quarter. We most certainly wouldn't advise venture capital as the primary investment strategy for new investors. There are less risky methods available if you have $1 million to invest. Number 7. Angel Investing. Angel investing is when you contribute finance and experience in exchange for a share of the company to a fresh startup in order to get the project off the ground. Out of all the choices on the list, this one carries the greatest danger. No matter how talented you are, if the company you're investing in can't move the project forward, neither it nor your investment will succeed. A seed investment might range from $10,000 to $100,000. This funding is used to help the business develop what is known as a minimum viable product and get some traction. Depending on how well you perform at this point, you can proceed and raise additional money at a higher valuation. Seed investments aren't as difficult as they initially appear, but you never want to be what the business community refers to as dumb money. Someone who only brings money to the table is referred to as dumb money. Invest only in companies whose growth can be accelerated by your knowledge, connections, and understanding of the industry. Before we proceed to the next part, what would you do if you had $1 million and wanted to invest in a business? Let us know in the comments section below because I want to hear from my viewers and get that conversation going. And now, back to the video. Number 8. Peer-to-peer lending. Peer-to-peer lending is a time-honored practice that is nearly identical to how banks and loan sharks operate, but is entirely legal. You give someone your money, and they must pay you back with interest. There are now several online channels for peer-to-peer lending because technology got involved. Although you can achieve returns of 12, 15, 20% annually on some of these platforms, we personally have never considered peer-to-peer lending as a long-term strategy. If you have a little money to invest and are willing to take on more risk, it might work for you. But if you have $1 million to invest, you probably have better and safer options. Number 9. Invest in art and collectibles. Early in the 1990s, instead of rare Jordans and Yeezys, Beanie Babies were being resold, with many of them reselling for between $10,000 and $50,000. The most costly one went for nearly $650,000. It's safe to assume that it was a passing trend. Hypebeast fashion is currently experiencing a similar situation. Actual art is a unique asset class to invest in. At least when it comes to legacy artifacts, the art market is the last one that is still unrestricted. Number 10. Buy a franchise business. You can purchase at least one well-known franchise business for $1 million. All you need to do is be an excellent manager, or even better, find an excellent one, and your company will continue to print you money. Franchise businesses require a large investment, but they also give you the tools, the training, and the name recognition. To own the Starbucks franchise, you'll need to make an initial payment of between $40,000 and $90,000, having a net worth of at least $250,000 and covering the costs of the branding and equipment. Then, having a minimum of $125,000 of that cash on hand and prepared to be invested in the company to pay for the startup expenses. Number 11. Land. With land, the transaction is rather simple. Buying land 20 to 40 miles outside of any large city and waiting 20 years is the fundamental land acquisition method. Since the world's population is expanding, businesses will likely continue to maintain their operations in major cities for the foreseeable future. The area outside the city is continually being developed since the employees of these firms need nearby homes. Soon, builders interested in constructing will be knocking on your door. These builders will either wish to purchase the property from you or, more frequently, come to an agreement where they will pay for the construction costs. You provide the land and divide the profits. Number 12. Emerging markets. When we refer to emerging markets, we mean two things. 1. Developing countries, and 2. Emerging trends. For instance, we obviously recognize that India has a sizable population and that the telecoms industry is currently experiencing tremendous business growth. Nearly 1 billion more users will sign up for the online services in the upcoming 10 years. These people will also need to trade, buy, sell, and use services. The same thing is taking place in Africa and South America. The other part relates to new developments and the direction the world is taking. Elon Musk went all in on the electric car when no one believed in the concept, and the majority of people never thought they would ever buy an electric car, and Tesla became the most profitable automaker as a result, riding the trend that switches gasoline to electricity. Number 13. Index funds. A fund called an index fund combines the 500 best performing US firms. A corporation is automatically removed and replaced with the one that will succeed if it performs poorly. In essence, you are making a single investment in the greatest businesses. This degree of diversification makes it practically certain that you will profit over the long run. Every year for the last 90 years, that profit has been almost 10%. In 10 years, $1 million invested now at 9.8%, returns would be $2.6 million. If you leave it there for 20 years, you'd have $6.5 million. This is how you make sure you never run out of money. And even Albert Einstein thought of compound interest as the eighth wonder of the world. So Billionistas, personally, which way is the best to invest your $1 million with? Let me know in the comments. That's it for this time. If you enjoyed the video, hit that like button and don't forget to subscribe. See you next time.